Hey guys, welcome to the video. Now, are you seriously thinking about investing your money now? Are you at a stage where you're really considering putting some serious money into the stock market? Well, in this video today, I'm gonna go over 5 things that I think you should actually do before you put that first dollar to work. Now, the first thing you actually want to do is you're gonna actually wanna build up your emergency fund. All right, now this isn't the most exciting step, but it's actually a really important one. Okay, now with an emergency fund, it's gonna be separate from your savings. It's gonna be actually separate from your savings, and it's going to be separate from the money you're going to use to invest, because what it's actually there for, it's just to cover any emergencies that might come along. And as you know, that can happen at any point. You don't know when an emergency is going to happen, right? Now, and the general rule of thumb for an emergency fund is actually to have about, save aside 3 to 6 months worth of your expenses. Now these are expenses, like your rent, things like your food. Really covers the basic essentials. It's not going to include your Netflix bill. It's not going to include your your Spotify subscription. This is just to cover those really important necessities. Okay. Now another reason, as it pertains to investing, why it's really important to have an emergency fund in place is, you don't want to be put into a position where you're going to put a big chunk of your net worth into the market, right? And then, an emergency comes along, and how are you going to cover it? How are you going to pay for those, right? If you're in that situation, the only thing to do is to sell your stock or sell your investments, and it might be sold at a point when they're not ready to be, you're not at a stage where they're ready to be sold, where you're going to profit. In fact, more often than not, you're probably going to be selling at a loss, because the market's always going up and down, right? So if you had your emergency fund in place, 3 to 6 months worth, that's a lot of leeway to give you time to get back on your feet without touching any of your investments. All right, so that's why it's quite important to actually have a really strong financial balance sheet before you really put any money into the market. All right, so that's the first step. Now, the second thing you're going to want to do once you've got your emergency fund in place, right, is you're going to actually want to then look at paying off any high interest debts that you might actually have, right? Things like your credit card, any car payments that you might have. Personal loans are a big one. Here in New Zealand, a lot of people like to hire purchase things which are usually at really high interest rates, right? You really want to get rid of those before you start investing into the market. Now, why do you want to actually do that? Because really you want to think about it as, think about it this way, right? You invest into the stock market, right? And any gains that you're going to make, anything that you're going to make off the stock market, it's just going to be, all your returns will be eaten up by the interest rates, right, from these loans and from these debts that you have, right? So, and that's why it's important to clear these off, because you're already going to be starting off on the back foot if you have these debts in place before you go into the market, right? If you have these, and it's really another key, another reason why it's quite important to actually get these debts paid off, is because if you have them in place, it's compound interest working the other way, right? Now in investing, compound interest is going to be something that you hear a lot. Einstein said it's the 8th wonder of the world. Well, if you have these high debt interest rates in place, it's kind of working against you rather than for you. And as you know, those can actually build up quite quickly and really set you behind on your investing goals. Now, the next two kind of go hand in hand, right? The next step is to really get a good basic understanding of the stock market. And what I mean by that is, I don't want you to go out now and start looking up day trading strategies, looking up how to read candlesticks. No, what I mean is really get a good grip on what to expect in the market, right? Get a good understanding of, how the fluctuations work, how often these fluctuations happen. And the reason why you're going to want to do that is really, it's going to help you hold through those tough times. Because if you just take a quick 20 to 30 minutes to have a quick research over the market and the history of the market, you'll see that there's been dips and there's been rallies and dips almost every year, what it seems like, right? And that way, if you kind of have a good understanding of what to expect and what might come along your way, you're not going to be as scared, and you're not going to get as emotional, and you don't panic sell when things do dip a little bit, right? There's nothing scarier than seeing red with your own money in the stock market, right? And that's going to actually then lead me into my 4th point. Now, this one here, it's an interesting one, really, because a lot of people don't think that investing has a lot to do with your emotions, right? A lot of people don't realize that a big part of investing is really mastering your own emotions, right? Everyone thinks it's all about just saving money, and it's all about throwing chunks of money in the market and watching it go up, and it's not going to affect. But a lot of people overlook how much it actually affects you emotionally. Just really think about it. Say you've got 80% of your net worth in the market, right? You've got, whether it's 10,000 or 20,000 or 100,000, and then you see that go down. There's nothing scary than really seeing your own money kind of, you feel like it's going down, and you feel like you're losing it, slipping out of your hands, right? And that's why it's really important to actually master your own emotions, right? Get a hold of them and really learn to control, to hone them in. And one of the best ways to do that is the point I mentioned before, right? Is to understand what you're getting yourself into, right? Now, going in guns a-blazing, right now seems like you can throw a dart blindfolded and you're going to make money in the market, right? But that's not going to last forever, right? That's not the history of the, if you look back at the history of the market, that's not how that's not generally not how it always goes, right? So if you really kind of understand what you're getting yourself into, really, and really learning to accept that, almost every year there's going to be a correction in the market, right? And the correction is the market going down 10% from its peak. Really accepting that these dips in the market are normal. They're normal things that happen in the market. Learning to accept those things and learning about the market will really help you accept that this is going to happen whether you like it or not. And if you have a good understanding of that, and if you have a good understanding of your emotions, this is what's going to allow you to hold your investments through those tough times, right? Now, a lot of people, that's how they actually lose money in the market, right? Is they panic when things go red. When you see red, the first thing you have to do is, I gotta get my money out, right? And then once you get your money out, that's it. You've actually crystallized your loss. That's dead money. You can't do anything to get that back now, right? But if you know what you're getting yourself into, you understand, what it is that you're doing. When you see that red, you're gonna know, hey, look, this is gonna happen. We're fine. We're gonna hold through this. We're probably gonna come out better for it at the end, right? So that's a whole other topic, learning how to master your emotions. But that's something that you really want to just sort of reflect on, right? How are you gonna feel when you have your money, real money, in the market? How are you gonna feel when when you see red, right? Are you gonna panic, or are you really at a stage where you know what you're getting yourself into, and you know that this is just a normal part of the market, and you're gonna actually hold through that hard time, right? Time is your friend when you're investing, so just keep that in mind, okay? The final thing that you're actually gonna wanna do now, all right, is something that I hope you actually don't ever stop doing, right? And it's a really big part of investing, is educating yourself, right? Really taking the time out to educate yourself. Now, you don't have to rush out, and this is something that I felt like I had to do immediately, once I discovered the wonder that is investing, right? And that is, I felt like I had to read every single book. I had to go and read every single article as quickly and as soon as I possibly could, right? Because the market was going to shoot off without me. But that's not true, right? This educating yourself is actually, it's going to be a lifelong journey, right? It's got to be something that I hope you keep doing. And really, it's an investment in yourself, and really should be the very first investment that you make, and that's in yourself, right? You're gonna want to learn about the market. There's a bunch of books that you can read, a bunch of books. There's hundreds of books out there that'll be great for you to read. There's podcasts out there everywhere. There's free information. You don't have to go ahead and book yourself into a college degree to think that you can do this, right? Now, there's YouTube is a great place for you to start learning. That's where one of the places I started learning as well. It's just, you really just take the time out, don't rush yourself. Just take the time out every single day, whether it's 5 minutes, an hour a day. Just put aside a little bit of time, get better every day, learn. As Warren Buffett always says, he doesn't know a great investor that doesn't love to read, right? Now, yes, guys, for those of us who don't like to read, it's gonna be something we're gonna have to do, right? I don't mean I was never the biggest reader. I'm not the biggest reader still, but what I've learned is that I've learned to enjoy the journey. I've learned to I enjoy learning about this stuff, right? And don't look at it as just reading. Look at it as learning, right? Because if you enjoy learning, I enjoy knowing that I'm striving towards something, that you're actually putting money in the bank, you know. So, you know, grab a couple of books, right? Listen to a podcast, listen to an audiobook, go on YouTube, right? These are things that's going to really, really hone your investing skills, right? And that's another big reason, right, why people lose money in the stock market. It's just simply going into it not knowing what they're doing, not knowing what they're getting themselves into, not knowing what they own, right? That's a big reason why people will lose money in the stock market. And you can avoid all of that just by taking an hour out of your day, you know, whether it's an hour and a half, an hour before bed, read a couple of books, right? Read a couple of articles, listen to an audiobook, and just really get a better understanding of how this whole thing works. Because guys, you can do it. It's something that you can actually, you don't need a professional to be able to do this, right? You just got to commit to it, right? Just like anything good that's worth doing, you got to commit yourself to it and really believe that you can do it, and it can be done, all right? Now, if you got any value out of this video at all, please like the video, subscribe so you don't miss any of my weekly videos, you know, any weekly videos about investing, helping you with your money, and just helping you better yourself. Right now, thanks a lot guys for tuning in. I'll see you guys in the next one.